Welcome everyone. Today is Wednesday. I'm Chris, Chief Marketing Officer of YCO Tax. We increase your cash flow but not your taxes. We provide virtual manpower of accountants, financial planners to make sure you get the most of your money without increasing your taxes. But yesterday, it's very productive, busy, productive day. My routine right now. It's more on Im, again immersion to the Dallas community. That's why we wake up, we start early, stay late, work smarter. But then again, we are not missing to serve you or to give you some contents for the business life here in Dallas, Texas. And we're planning to put your business and life in the spotlight. Just public service announcement that since Dallas experienced storms for the past weeks, the Dallas County specifically and the nearby counties, you have to check it on the SBA.gov website. Again, it's an SBA.gov website that you are qualified to apply for the business loan. The business disaster loan, primarily, it's a type of loan to recover from the disaster that your business experienced. So there are two types of loan that you have to apply. The first one is the physical injury. For example, if this has been declared as the disaster and then your restaurant got flooded, there are damages from the table, the door, the physical marketing signs on your building. Even there's a power outage, there's a leak in the roof, all of those because of the disaster, you could apply. The loan could be between 25,000 up to $2 million. Where there's another type of loan called the AIDL, or Economic Injury Disaster Loan. It is not like a physical damage, but because of the disaster, the business was paralyzed, or the next few months or years, your business got affected by the disaster. What I mean by that, for example, like in Richardson, I think, or in other areas where they have power outage and there are so many trees that fell, so many that so many trees that fell, and there's so many structures that obstructed the flow of your customers going to your location. So what's gonna happen is it's gonna affect your regular sales. If you're making $100,000 per month, but because the client decided to go somewhere, so that is something that you could apply as an economic injury disaster. Because of the something that beyond your control. This is the threat that threats your business. You can apply for the economic injury disaster loan because they said it's gonna take a while for you to recover. All you have to do, and sometimes this type of loan is the low interest loan. They don't really look whether your credit score is 700 or more. That's one they do consider, but it doesn't mean that they're gonna reject that, because this is a benefit from the government. This is not from a private lender or anything. So make the most out of it. There's a deadline. I think it's July 1 for the physical injury, and for the economic injury disaster until January next year you could. So but make sure that all your financial documents, these are more financial documents. The 2-year financial statement should be ready, and also your tax return should also be ready. They require you that either you file an extension for this year, or you already filed your current tax return. So to know more about this, feel free to book your free consultation with us so we can give you further guidance. And that's why we're here. We are increasing your cash flow, but not your taxes. And then moving on, and how to secure your business. Because securing your business, it's not just about increasing the income, but also cutting the sales, cutting your expenses. So these go hand in hand. It should not be the other way around. As long as your sales is going up, the expenses should be going down. Which results to a higher net profit margin. again, the rule of your business are for you. Your business should give your lifestyle or give the quality of life where you can enjoy the money that you're making. It's not what you make, but it is how much you save and invest. Yesterday on our Tax Savings Tuesday, we discussed the different ways how you can secure the future of your business. Let me just go and try to exit. Uh, Number one, like what I mentioned before, is the forecasting. There are three things that you need to understand on securing your business. Okay, you need to know your numbers. This is more the forecasting and budgeting. Knowing your numbers is the very important because this is more like the blueprint of your company. Oh, horrible traffic. Oh, this is so good. I was able to do that. This is way better for me. Again, I always said that there are three F's of the business. There's the figures, which is the figures, the facts, and the feelings. The figures are more the this is what we're talking about, the forecasting. You need to know your financials. You need to know how much you're making, how much you're spending on things, the asset of the company, how much is your liability. The facts are the market. When what are the your market you're serving? Everybody's not your market. So when someone says, "Oh, I'm serving everybody," if your service accommodates everybody, then you don't have a target market. You don't have a specialization. You're more like a generalist. But guess what? It's more about the quality of your clients, not the quantity. Focusing on the quality where you can specialize, it's more about niche marketing. And then you want to work smart. You would rather have clients, 23 clients that are paying you $23,000 in a year rather than 2,300 clients that paying you $23 a year. So which is which? You have to choose your battle. So that's the figures and then the facts. And then the third that I recommend, it's the feelings. So the feelings focus more on what are you passionate about. This is living with the purpose that you enjoy what you're doing. And that is something that you also have to understand that you don't get the business that's right now because oh people are making money, like people invested their money in cryptos and then they lose their money because it's always that kind of gold rush according to Jeff Bezos. It's not about the hype, it's about what you're passionate about. What do you feel about the business? Is this something you see in the long run for the next 15 to 30 years of your life? Would it make you feel good doing this from the product or the service? Because if it's not, then maybe you're in the wrong business and you have to go back to your drawing board. You cannot be just persuaded by other people because they're making tons of money, but you're not happy with the product or the service. All right. So again, whenever you're making or entering or growing your business, you always have to look on those three F's: the facts, the figures, and your feeling about your business. Okay, so 14. So that's why any type of a startup or a scale up company, you need to look on the past 2 years of your business and the next 2 years of your business because that will determine on your financial forecasting whether do you have too much cost, do you have too much uh, people, do you have kind of subscriptions that because this is always changing. There are different type of business life cycle. The major expenses you have on the first 2 years might not be the same expenses you have on the next 4 years of your business. That's we covered this yesterday on my Tax Savings Tuesday. That, for example, first 2 years you do the startup. Again, in a restaurant, they spend so much on the startup cost because they have to build the banner, they have to redecorate the coffee shop and able to be more conducive, buying tables, chairs, those coffee machine. But at the end, eventually, and then they also buy this technology from the payment system of the credit card, training of the people. So you spend a lot of manpower, startup costs. But then after that, you don't have the same expenses no more because you're already established. You already settled. Your business is up or it's open to serve the client. The next, but now on the third, fourth year, you're now more spending more on logistics because you decided to offer serving more online. You want to deliver and cater to more market the people in a coffee shop that cannot go to your coffee shop, they started to order online, so which means your next budget will be more on technology, more on the security, and also the logistics from getting your order to the next time it's getting how it will be delivered fast to the given market or to your clients. So second, fourth year, but then again you're wearing different hats, you're kind of exhausted because your business outgrows you. There's so many demands and less manpower because you're doing everything. So maybe on the fifth, sixth year, you're going to explore hiring managers, account managers from different departments, from the branch manager or to the operations. You also have a senior accountant or senior marketer, public relation officer. So now you're spending more on the executive or the consultants. So that's why you always want to check which of these expenses would generate more on the company's budget. Then that would require you to maybe you expand. It takes money to make money, that you may need an investor, you might even have a expand your loan. So those are the things that as an entrepreneur you're looking, because you're no longer self-employed, you have people under you that trust on your leadership and your decision making. That's why you cannot be stuck with the day-to-day thing on your company, the routine. Because before you become the janitor, you open, you sell, you become the salesperson. But now you elevate yourself to become more an executive function. That's why you have to delegate and elevate. That's what I'm referring when you say I mentioned that you have to work smart. So after the forecasting and budgeting of the company, try to take a look on these numbers every. If you're $1 million, even like half million, you need to have a quarterly check up on your numbers. But if you're less than half million, maybe every 6 months. There's no specific amount of time that you really want. But I mean, what I'm saying is you can check your numbers every time you want, but do not overdo it. Once a month would be ideal, or every 3 months. Okay. So the next thing on securing your future, also do not, you need to check, diversify your money, investment opportunities with tax advantages. So whenever we say investment, one thing that I learned about running a company, you need to get yourself paid. You have to be on the payroll, because if you're spending 10,000 because you have kids, 10,000 per month, where are you going to get that money? You cannot have just equity from your company, because those any money that you withdraw for personal or family use is taxable. What, treat yourself as an employee, and by treating yourself an employee, your LLC should be an S corporation, enable for you to be considered as employee. When you are the employee of the company, you can issue yourself a salary, a reasonable salary allowed by the IRS, maybe $10,000 per month. So that makes sense. It covers the expenses for your family, and then you're on the W-2. And then also, because you're an employee, you can offer different insurance, protect yourself and protect your company. That is what you call the Index Universal Life. And that's why a lot of people are against about the IUL, because they were not properly explained. The IUL is not meant for investment. This is more on protection, that there's a lump sum money. Because if you're the manager of your company and something happened to you, what's going to happen to the business? Whether you become chronically ill, terminally ill, or died, who's gonna run the business, and where are you gonna get that money to recover if you that's why this kind of insurance, what's gonna happen if you're the breadwinner and something happened to you, your mom, your family, your wife, the kids will receive half of the money, and the other half will go to the company and able to use for training. So that is why people don't realize how important having index universal life to be part as of the product of your, like a benefit of you as an owner. Okay, you can also open 401k plans. This is solely an investment, but there's a risk where they don't secure the principal. Those are just an options for your employees. To retain them, you also want to make sure they have either term insurance. So aside from their hourly rate, they have this benefits that they will looking forward in the long run, because people stay not just for the hourly rate salaries or bonus, but they also see that they have a lump sum money that something happened to them, like in case of death, dying, that the could, I mean, there are so many things that you can do when you are the manager of the company. You could have yourself a defined benefit plans, uh, retirement plans, and those are all companies' expense. So you see how you can legally reduce your taxes. Then also accountable plans like reimbursement from your mileage, from your travel because you're training. So those are just so many things. That's why our company is not just a financial planner, but we have team of virtual accountants that work hand in hand to make sure we increase your cash flow and not your taxes. All right, so those are the investment opportunity, and also like when this situation, insurance. When I say getting the right insurance for your company, we're not talking about just life insurance. Your building need to be insured if there's a flood insurance, hurricane insurance, error and omission, general liability, even workers' compensation. You kind of have to, because these are the major drawbacks of a business that you don't anticipate, and you don't want to disrupt your business model with this. Okay, so I think we're here. Last time I got lost here, but now, uh, yes, we come early. Again, these are just the bullets and nuggets of running a business, whether you're scale up or startup. These are the golden rule to follow, and we're ready. We're ready to make more money, honey. Again, if you like this content, we have a replay on YouTube. I'll talk to you soon, because just like you,